Yeah, and I have bookmap working on my machine, which is good. So is it working on yours as well?
Yes, yes.
Okay. What markets do you have?
Uh, I I watch the ES and NQ.
Okay, but do you have Eurex as well, or not?
I guess so. I subscribe the Rhythmic paper
Ah,
account.
yeah. Okay, I think you.
Hello?
Yeah, yeah, I'm there. I'm not sure I have bookmap talking. Bookmap is telling me a symbol. Can you hear me?
Yes, I can hear you.
Yeah, I'm not sure why bookmap is giving symbol. I hear something about the YS, so because I have bookmark open. Hold on, let me put the credential, and you can give me yours.
Okay.
So we'll start the session with TeamViewer. And also, yeah, I'm gonna take a look at your I'm gonna take a look at your bookmap to see if you do have the DAX.
Okay.
Okay, I have bookmap talking. I don't know how I can shut up bookmap. Did-
It seems that your microphone has some problem.
Why?
Uh,
It's talking. It's repeating the. Hold on. Let me see if I can shut down bookmap in the here in the sounds. Is your bookmap talking as well?
no.
That's strange. Okay, hold on. The mine is saying all the symbols. Let me see if I can shut it. Ah, yeah, it's here. Okay, let me shut it down. It's the first time that I have that. Bookmap usually doesn't talk, but here it's like talking a lot, saying all the symbols of everything that is open on the platform. So you still
Uh,
hear me, right?
yes. Uh,
Can you
bef-
see my bookmap? Can you
y-
see it?
yes.
Okay, great.
Before we start, I have some questions.
Sure, we're gonna do a Q&A session. Just maybe first I'm going to connect to your machine, and um,
Should I also
y-
open my book map?
yes, open it. Open it. We're gonna try to. I hope if you. Ah, yes. Hold on. I'm gonna get the symbols because there are a lot of symbols. The symbols are different with Bookmap. Uh,
The book map has has changed a lot.
yeah, but we just need the same. What
Yeah.
we use with Bookmap, it's the same. Okay, hold on. I'm opening my email. I'm invited to some bank events. Bum bum bum. Okay. Yeah, I'm invited to an investment thing for some banks. Okay, let me find the symbols page. Did you ever saw the symbols page for Bookmap?
Yes,
There
I
is.
have the symbol.
Yeah, yeah, yeah. It's this, huh? I'm not sure which screen you see with Viewer, but this is the right page for. Yeah, but you have a different data feed, so you have IQ feed, right?
Um,
GTN
Rhythmic.
IQ. Ah, rhythmic. Okay, okay, okay. Yeah, rhythmic is good as well. Okay, let me connect to your platform partner ID. Of course, it changed because yesterday I had someone else. Let me grab your details. How was your trading? Did you have the time to practice?
Yes. When I practice, I face some problems.
Okay, great. We're gonna address that. Okay, let me take the control, and then you're gonna ask me your questions. Password. There we go. Yeah, I think you must receive the invitation now. Yeah, I'm
Uh,
connecting. Okay, I need to move
let
the
me
screen.
Let me.
Accept. Okay, there we go. Uh, okay, can you still hear me?
Uh, please
You need
wait a
to.
moment. I
Okay, yeah, I know.
setting.
You need to do the little trick.
Uh, what about now?
Yes, me, I hear you fine, huh? Can you hear me well?
Yes.
Okay, great. Okay, so let's do a Q&A session. What are your questions? Let me, or maybe should I open Xtrader as well? Maybe?
What?
Or you can open it. Should we open Xtrader on your computer? Should we open Xtrader on your computer as well?
You mean TT?
Yes, TT. Sorry. Yeah, absolutely.
Okay.
So
Can you see
maybe
my
if you have.
screen?
Yes, perfectly. Looks like the connection is good.
My question is that I have two questions.
Yeah,
You
sure.
often talk about the risk reward. My question is how do you define it, and how to judge the risk reward, and how to know the risk reward is okay to check
It's
a
good.
trade.
Okay, okay, good. And that's a very good question. It's very important. Which screen do you see currently?
The TT.
TT? No, no, my screens.
Okay.
Do you see one of my screens?
Okay. Let me. Yes, I now see your screen.
Okay, great, great. Hold on, don't move on. Let me move this here. There we go. Okay, risk reward is it's the most important thing. Why? Because you want to have the best expectancy as possible. Hold on. Yeah, there we go. Yeah, I'm picking the right screen. Okay, there we go. Oh no, here I'm on all the screens. Hold on,
Okay.
because I need to have my pen. Yeah, for this screen. Yeah, now it's good. Okay, risk reward. You open in the morning. Okay, when you open in the morning, then you're in range discovery. Okay, you will go up, then you will go down, and the market is looking for the right range. In this case, you need to be cautious because in range extension, you don't really know what your risk reward is. I mean, you have the risk reward for one specific trade, but you also have the risk reward for the day. Okay? When I say the risk reward for the day, as I told you, for example, when I'm trading FDAX, the market opens, and for the first hour and a half, I hope to have a reversal. Okay.
The W button
Thus,
you show me.
yeah, absolutely. I think it happened. I think it happened Monday, by the way, during the first 30 minutes. I think so. But we're gonna take a look after. But look, for example, if you do have something like this here, you know that there is a potential reversal. So you're expecting a very high risk reward. When you're expecting a high risk reward, you can be more aggressive. Okay? Anytime you have either an intraday low or you have either an order book low or high, and this is like for both low or high, low or high.
I not quite understand.
Okay, let me finish because
Okay.
I'm not done. Okay, so during the day, anytime you're expecting a high or a low, it can be in the book. So if you have in the order book, you have the price action going up or going down and doing this, up, 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 up. This is speed to the top or speed to the bottom. Then it stops. Then it starts to play between the bid and the ask. This area here should be your risk. About half this should be your potential reward. Okay, here is the same. This should be your potential reward. Me, when I watch you trading, I see that usually you want to enter here or you want to enter here, which means basically that the reward you have is small compared to the risk you're ready to take. You always need to, when you watch the order book, inside the order book, you need to be ready to risk about this space in the book to make about this space.
I have a question.
Yeah.
When you draw the risk area, I mean, how did you identify this risk area? How large?
The risk area.
Yeah.
The risk area is discovery. The risk is discovery. Okay. Hold on. Let me save this one. I'm gonna call it RR for risk reward. Risk reward like this. Okay. So imagine the order book is doing this. Then it stops. It stays here. Then it starts doing this. Okay, this is where we traded. All this area here in the book. This is time. Okay, this is price. Okay, as soon as we have here speed, you see on that because this happened like in, for example, this is like a 5 seconds chart, for example. Okay, 5 sec. Each bar here is 5 seconds. Okay, or even less, 3 seconds. Let's say 3 or 2 seconds. Okay, you had speed. So in 2 seconds, we went and did like 1, 2, 3, 4, 5, 6 ticks, for example. It stops. It plays here in a zone of 1 or 2 or 3 ticks. Okay.
Okay.
It comes first. It did this. So it comes from here. This area is the place where the price was for the last 15 to 20 to 25 seconds. Okay, so this is the potential reward. The price was there. You're expecting the price to go back there. But this area is unknown. You don't know if the market is going to keep going there. So you're anticipating the market, when it does this, you anticipate the market to stop. Okay? It might continue later. We don't know that. But you keep in mind, when you're working in the order book, the reward happens in the known price zone. Why do I call this the known price zone? Because market already was here. This is discovery.
So is the
So the risk should be
sideways
this.
movement at the top of the order book? Is that right?
This is not here. I'm not talking specifically of the top of the order book. I'm talking here of the top of the order book in the last 45 seconds to 1 minute. You understand what I mean?
So it's a sideways movement in a chart. Is that right?
No, because this whole thing is a 2-minute candle.
Okay.
You understand? I'm showing you here what happens in the book.
Okay.
You understand? Because I feel like you don't understand what I mean.
It's
sure
like it's like a speed fade.
Yes, but I mean the risk reward is this is a place where we didn't trade for the last minute or 2 minutes. So to us, we don't know if the market is going to keep going there. Maybe let's take, can you please take the DAX? We're gonna see if it's volatile, and maybe I can show you a concrete example in the current price action.
The DAX, I need to log out.
You don't have the DAX here. Sorry. Yeah, it is here. I'm going to save. Yeah, it's okay.
Oh, what happened?
Oh, I think it's just several workspaces opening. Don't worry. Just open a new one here, right here.
Here is the DAX.
Where is it?
Here.
Yeah, there. Okay. Let's make it bigger, and let's see how it's going.
I can do it.
Okay. Yeah, sure. It's a little difficult with the lag. Put a quantity of 1. Put a quantity of 1, and let's try. And just bring a 2-minute chart as well, so that we can have a look. Yeah, it's a very good uptrend, huh?
Yes.
Yeah, so this is a bad market to show this type of things, because here it looks like there's a lot of pressure to the buy side. When you have an uptrend, then the risk reward is not an applicable concept, because in fact the difficult thing is that you need to shift your mind when you have an uptrend. But that's what I was explaining earlier in the first slide, that when you're in price discovery mode, then the concept of risk reward is not really something you can apply unless you're looking for a fade. Okay, can you put the volume just to see how the volume is going?
You're seeing a strong uptrend.
Yeah, very strong, yes. Okay, but yeah, we're gonna apply it. Okay, hold on. Look, this here, even if it's not really a speed fade, I mean, you will have, like, look, for example, now you see we were tracing to 45, so the reward will be 47.5, and the risk would be 45 till 44. You understand?
Yes.
Okay, now we're discovering too late. Okay, recenter, so that we can see the highs. Where are the highs? Can you scroll up to the highs? Okay, this could be kind of a trap, huh? Because there was a lot of slippage. Me with the lag, I didn't see the market really making the highs. Look, now the reward will be 57 if it goes back and makes new highs. But beware, because we are 10, so it's the first 30 minutes, there is a high probability of a reverse. Now we have two ways of seeing this. Either we take a longer time scale, like for example, a time scale of about 10 minutes, if we want to keep a trade like 5 to 10 minutes. Then we can say that the potential reward will be, okay, let me grab it. The potential reward will be here. Can you see my mouse?
Yes.
Okay, look, the potential reward will be here, 58, and the risk would be from wherever we see a rejection to the top. Or we can try to think in an even longer time scale. Then we will say the potential risk is up to 58 if we want to short, and the potential reward is all the way down to, you see the low, huh? The reverse, we have kind of a W around 11,952. Can you see that?
Yes.
Okay, you understand what I mean now with the concept of, this is the concept of risk reward for the kind of the longer time scale, like 5 to 10 minutes. Now we will apply the same concept of risk reward inside the book, but for the last 10 to 15 seconds. First of all, we need to decide, do you want to try, do you think it's going to be a reversal? And do you want to try to short this? Or do you think this will be a continuation and you want to try to keep working this to the long side? What do you prefer?
I prefer to the long side.
The long side. Okay, look, now it starts to push down. So it means we have an edge. If we walk the long side, we can have a better risk reward in the shorter time, like in the last 2 minutes, for example. Why? Because we're making new lows in the very short time frame. Okay, look for a rejection, yes. Try to find a rejection, a good strong rejection. Huh? Now I don't see any. 41 maybe a little, 41. 41
41.
could be a rejection price, but it looks like it's not a strong rejection enough.
Yes.
Maybe 41. Okay, so look, the risk will be 41, you can go up to 39 and a half. Okay, beat 41 and a half, beat 41 and a half. We want to chase a little. You can beat 41 and a half or 42. Okay, 41 and a half we filled with one contract. You don't want the market to go lower than 39 and a half. So you need to be ready to exit because the risk here is just a few ticks because we're discovering price in a shorter time frame. Now, try to wait for a push. If we don't have a push, okay, now it's okay. It's okay. Look, it's okay. It keeps going. It keeps going. We wait for till we see a rejection on the other side. We don't see a rejection. I don't see a rejection yet. 47 is accepted. 47 is accepted. It's hesitating a little on 47, but it's not a proper rejection. It's hesitation. Okay, 47 looks like okay, this is a rejection. Exit 46, exit 46, exit 46, put an order at 46. We're gonna see, there we go. You understand the concept of risk reward? We tried, we risked for the, where did we enter again?
41.
Okay, we entered 40, we should have kept it, but now it's easy to say that, but there was a rejection, so I thought it might reverse, but it looks like it's going to keep going to the high side. But you understand, we risked like 2-3 ticks to make 10 ticks. This is a good risk reward. But you need to understand, we have a risk reward on the shorter time frame, but we also have a risk reward on the longer time frame. Here, the risk reward on the longer time frame was mainly to the best risk reward to the longer time frame was to the short side, but the risk reward to the shorter time frame was to the upside. You understand?
I have a question. How do you know the risk is only 3 ticks?
Eyeballing the volatility.
Oh, I see.
I was watching the volatility and it was in price discovery. Remember, take my screen back. Take my screen back. What I was drawing on the screen. Okay, you see, we had this, but in the other direction. Here I'm doing it to the short side, but it's exactly what we had. Look, look, I'm gonna save this one and I'm gonna make another one to the other side so it's clear for you to see it. Look, now what we have, we had the market doing this. It was slow, it was not like fast, it was slow. This in the book. Then it did this, then it did this, then it did this, then it did this, then it did this. And our order was here. This, on the shorter time frame, this zone is price discovery. Okay, why? Because on a shorter...
does that means that in a short time frame, it is actually a sideways movement?
No, when I say short time frame, I mean order book time frame. You don't see that on candles, what I'm showing you here. It's inside the book. So it was doing, okay, we're coming from here. This is the start. The start. Okay, so we're starting from here. This was the new high. Okay, then from there we did this. No, first from the new high we did a strong rejection, like straight till here. Okay, then we're moving down, 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 and we saw this. Then I told you, put an order here. In the beginning, I thought this was a good price, but I thought it was not possible for us to revisit this price. So I told you, put an order here. and then the market started to do this, and it did this. Okay, yeah, not the high is higher. Huh? We did only a small part, but let's imagine that this is a zoom. Okay, in the action. So this was the risk. But since we have an idea that the volatility, the current volatility for what we're watching was about this, then we were ready to risk about this. But the reward was good because we were thinking of doing this and even way higher to the former new high. You understand?
So the risk is put the range of the discovery zone as
You have two risk rewards. You have the risk reward that you can watch
as
on
the risk.
Yizu, you have the risk reward that you can see on the chart. So this gives you the frame. This gives you the map of what's happening. Okay. Okay. Let me save this and let me.
Excuse me. I still have a question. So by watching what you show me, the risk you take is the range of the discovery discovery area. Is that right?
Yeah, that's right. But beware, because I think something here is difficult for you to understand because it's hard to understand and it's even hard to explain. You have the map. Okay, what I call the map is like the general guideline. The general guideline, we're going to take this specific example because you know it's real, you know it happened just a couple of minutes ago. The general map was this. So the candles are doing this. Okay, here I'm telling you, let's have an example. We're watching the market. We see that there is a bullish pressure. Then this is the high of the day. Then the market is breaking. And this is the new high of the day. Okay? Then it starts to retrace and it does this. You need to understand, this is what we see on the candles. On the candles, we know two things. First one is that we know that the best reward on this time frame is on the short side. Why are we interested in candles? Because we are between 9 and 11:30, and we know that there is a high probability between 9 and 10:30, and there is a Central European time, and there is a high probability of a reversal. So if we're thinking of being a lazy trader, and if we're thinking of holding the contract as long as we can, it's nothing is correct or wrong. It's just a personal choice. Okay? You could say, me, I'm trying to work a reversal because I think it can go all the way back to the lows because it's still early to say it's a trend. It might just be an early move before a reversal. So you can try to say, me, I'm working the reversal. And why? Because you know that on the longer time frame, the reward is short, to the short side. You understand that?
Yes.
Okay. But then we zoom into this. Okay, we zoom into this action and we started to trade here. Here, we look to the book. And the overall concept of the risk reward during the day is also applying for any entry or exit you have in the book. Okay, you understand that? Which means that basically in the book, when you see the market doing this, this is the reward. Okay. And when the market is going down, anything under this in the last minutes is price discovery. But you might say, yes, but Ken, it's not really price discovery because we went already there. Yes, but this is on another time scale. Now we're in the book, and for us in the book, because for the last minute or 2 minutes or 3 minutes we're watching the book, we did not see the market going in this area. Okay? So if if we watch the book and we know there is a strong buy pressure because it was like a 45-degree trend, and we see that it's not a shift, why can I say it's not a, why can I tell you it's not a shift? Because I didn't see a lot of volume, I didn't see a lot of rejection. I saw a market carefully going down. It didn't look like a reversal. You know, the market went down. We didn't have much of a retracement to the upside, but I did not see any panic. I did not see any stops go off. Actually, it was very careful. The retracement was very careful. It does not mean that it will not go up to the M top and then keep retracing. Then we might see some panic and some stops triggered here. Okay? But at this time, we were here. So I told you, now, I think this was 41 and a half. Is that correct?
Yeah, 41.
41. Okay. We entered 41 or we entered 41 and a half. I'm not sure anymore. Okay. Let's say we entered 41 and a half. This will be the discovery zone. So we can be very aggressive because we did not see any time the price going in this zone for the time we were watching the book. So for us, this is price discovery. So for us, we're risking, we saw the market coming from here and it was stopping into this zone and doing this. So we need to risk a little like this to try to make as much as possible to in the other direction.
I have a
You
question.
understand?
I have a question. You have mentioned just now that the down move must have the speed, but actually
There
by
was no speed.
yeah there was no speed.
No, I'm saying if it was a reversal, because if I felt that the market was going to continue down, I wouldn't have told you work the long side. But because it was retracing in a very slow way, it gave me the indication that there were no interest seller at this time. It doesn't mean that it won't change in the 5 next minutes. No, actually, I don't even know what the market is doing now that we're talking. So we will take a look and we will see. But in the price action, me, what I saw was a careful, slow retracement and a careful, slow rejection. So to me, there was still buying pressure because look, the market was doing, let me save this again. The market was doing, okay, for them. Okay, the market was doing this. Where is my pen? Here. The market was doing this. This is a perfect 45-degree type of trend. It's the trend that you see in the books.
Yes.
Okay, it's a very good trend. So it's full of, it should be full of stops here. Okay, so if the uptrend was not strong, if the market shift, we should have seen a reversal with some acceleration to the downside. If I see acceleration to the downside, I'm interested in the short side. But I did not see that. I saw a market that was retracing carefully with no volume. And as soon as there was a spot where it stopped, it looked like more buyers were coming in. So I told you, yeah, try to buy this. And to me, this here was the risk, a small risk, for potential reward back to the top. Now, to be honest, I would have preferred, and it was an option, I would have preferred to have seen a lot of buying pressure and acceleration and a new high, but we did not see that. We saw the market pushing in the other direction carefully. It did like, I think it did something like this, straight like this, little retracement, then a second time straight like this, then it starting to do this. And I was expecting for the market to keep going, but then it broke a little lower. And then I told you, and then even a little lower. Then I told you exit here. And when it did this, it was an exit. Okay? But then after, it kept going. But there was not much follow-up. So I told myself, follow-up. So I told myself it could be good to exit.
Okay.
You understand? Because I know it's quite difficult to explain, actually. It's difficult to explain. But what you need to understand, you have your first general map. The general map is to know, okay, we did this. We had a high. Now we're retracing. The biggest reward we have in the general map is here. And if we mark this place, then the risk we should take should be this. That's the general map. But in a smaller time frame,
It depends on the retracement's speed.
exactly. On a smaller time frame, we could also say it did this, it's retracing like this, then this is the risk. And this is the reward. You understand?
Yes.
So we don't want to hold this for a long time. But the main idea here is that whatever you do, you need to know that you want to risk this to try to make this. Okay?
Yeah.
And I know it's difficult, okay? You need to understand. Here in this example, it was easy to do because, you know, the market was easy to read. But sometimes when there is a lot of volatility, you're planning to risk this, but the volatility is high and it's just boom, it's going through it and it's moving like 10 ticks. And the time you see that it's breaking your mental stop zone, it already moved 10 ticks. But what you should do, because the volatility, you know, volatility shifts, but for a long time, the volatility in place is going to stay. Okay? So what I mean is that the volatility is like this. Okay? Volatility, let's say this is the volatility. Okay, it will, for example, open here, and then the volatility will stay like this. It can increase a little, it will do this. And then at some point, volatility might change. But us, we don't know when it will change. We always hope that the volatility will stay the same. Why? Because when we watch the book, we will watch the book, like for example, this would be the range. And this would be the time. Okay, so let's say that we have a range of 10 in a time of 30 seconds. We hope for the volatility to stay about 10 ticks of range in 30 seconds. You understand?
Yes.
But it can change anytime. We cannot control that. What we know is that if there is a news, it might increase and go up to, let's say, 30 ticks. Why would it increase? Why, yes? What would be a good reason for the volatility to increase? Because there is a news, but why is the volatility increasing when there is a news? What is the market maker doing?
The liquidity is
Exactly. What is volatility? Volatility is the effect of a high number of aggressive size compared to the available liquidity at each price. Okay, so the volatility might change at any time, but us as a trader, we start, when we work on strategies, we think that the volatility will remain the same. Okay, if it changes, we take a loss.
okay.
Understand?
Yes.
Okay, so each time we expect the volatility to stay the same, and we expect the current market situation to stay the same. Okay, so here the market situation was bullish and slow. Okay, so we expect, this is like 10 ticks, we expect it to stay about 10 ticks. See here, 10 ticks. And it means that when we're watching the market, it's going like up 10 ticks, then retracing a little, then it keeps going up 10 ticks. So as soon as we have a retracement of about 10 ticks and then another retracement of about 10 ticks, we feel like, it has retraced like 20, 25 ticks. We're ready to risk this area here of about, let's say, 3 to 5 ticks. And we're expecting the market to resume and go in the other direction. But of course, if the market is going through it and the volatility change because there is a stop trigger, because there is a very aggressive sellers that takes liquidity and that's coming in, and the market makers is drying out the available liquidity, then we're going to take a stop. But what will happen is that if we start to watch the market and we see that in a time of 30 seconds, the market is doing 30 ticks, we know that we need to wait for a way bigger retracement, and that we also need to be larger with our stop zone. Or what is something else we can do to protect ourselves?
Spread.
Yes, absolutely. That's a first possibility. And what is the second possibility? If we don't want to work spreads, but we know that there is a lot of volatility,
lower the contract you
lower the contract you trade or scale in.
scaling. Yeah.
If you scale in, you don't need to be exactly right about the zone. The problem is that if there is a real reversal, you need to see that the reversal is occurring. Okay, because if you don't feel me here, I did not see the reversal. Can you take the DAX back? We're
Okay.
gonna try to see what it's doing, and maybe try to look if we can find another real-time market example.
It's just like what you say, in a longer time frame, it go down.
Me, I still see my screen. I do not see your the DAX. I still see my own screen. We lost the connection. Okay, hold on. It's trying to reconnect. Not sure why. It lost the connection to TeamViewer. It's why I'm not seeing anything.
But I can still see your screen.
Yeah, that's strange. But it looks like I'm not getting your upload anymore. Look, if you see my screen, look what I have. Can you see?
Yes.
This is your screen. Okay, maybe I will just try to reconnect.
The password and ID is the same.
It's the same, huh? Yes. Is it okay now? No, still not. Okay, let me retry. Okay, now I think you will receive an invite. Okay, this one I can close. Okay, now I see it. I think you need to do the sound again. I have an infinity screen. Okay, there we go. I think we need to... Is it okay with the sound?
Yeah.
Yeah, you see, so this is on the longer time frame. This is the reversal. It might be. You see, this is the W. You see this and this is the W. Like, can you take my screen back? Can you take my screen back?
Yes.
Okay, this is this. So it might be the high of the day. You see, it's like a M with a lower. Can you see that? You can take the chart back and you can take a look and see if you see the M that I'm talking about.
Yes.
This is the best risk reward you can get. When you work this M, this is the best. This is why you can be more aggressive. Sometimes I try this trade 1, 2, 3, 4, 5, 6 times because I know that even if I'm losing, because it's close to the high, so even if I'm losing three times, 4 times, 5 times, I don't care because I know that the reward is so good that I can lose it a lot of times. Because look to the risk and look to the reward. Can you see that?
Yes.
Okay, so let me show you something else that you need to keep in mind. Because you trade mainly the morning session, right? You trade mainly the European morning session.
Yes.
Is that correct? Okay.
Yes.
So look. Can you see my screen? You can take my
yes.
my screen. Okay. I think I told you that already. When I start to trade, I'm very aggressive because I know I have a long day to make up. Sometimes I start the day like minus 2,000, minus 3,000. I start in 45 minutes. I don't care. I know I have a lot of opportunities, you know? But the closer we get to the US afternoon session and the European close, so the closer we get to 5 p.m. Central European time, the less aggressive I'm getting. In the end, I know that I'm screwed. If I'm still, if at 10:30 Eastern time, so 10:30 in the evening China time, okay, your time.
Okay.
If I know that at that time I'm still in the red, it's not even worth trying. I'm screwed. It's gonna be a losing day. But in the beginning of the day, I know for a fact that on the DAX for the first hour and a half, I have a lot of chance of catching the daily reversal. If I do catch the daily reversal, I know my day is done. I don't have to trade anymore. I'm gonna keep it. And sometimes I'm even going to go out, put a hard stop, and go do stuff outside, going to the gym, going to whatever. And when I'm coming back, I know that I have a profit. It's a free trade. But the key with that is being able to get it. If I'm stopped at break even, I'm stopped at break even. It doesn't matter. Because at least I will try to trade multiples, and at least I will have take a good profit on the first or the second or the third contract. Then the last one I can keep it. And if the whole day it's a trend day, then so be it. It's a good day.
When you trade multiple contract, do you scale in or
Yeah, I always
or
scale in.
or do it at the same time?
Always scaling.
Scaling. Okay.
It is very rare for me to enter at the same time. I always scaling. It allows me to add to winners. It allows me to take profit partially. It allows me, the concept is try to have a runner. You know what a runner is? The runner is the last contract you keep because you was able to catch the reversal. When I'm done after the first hour and a half, if I don't have a reversal, I forget about the reversal trading. Okay, because to me, if I have a reversal, it will happen. The probability, I have a high probability for it in the 35 first minutes, then a little less probability, but still high for the time scale from 35 to 65, then a little higher from 65 minutes to let's say about 95 minutes. And it's always this that I'm looking for. The W here, or the M here.
Okay.
But why can I try this trade a lot? Because I know that I have a lot of time to make up. Because sometimes I will just see like there is a trend and then I'm screwed because I'm stopped and I have a new high. Then I'm like I'm wrong. Then I'm retrying it and then I'm wrong again. And the third time I will be wrong again. And then I know, okay, I forgot about this. Let's go with the trend. Let's try to go with the trend. Let's try, because I was stopped 3 times trying to short. This market doesn't want to sell. Then I will try to go in, maybe with, let's say, an average size. Then if I'm making a profit, then I will try to keep doing it with bigger size. And the idea is to make up for the loss I did when I was trying to catch the reversal. Me, usually, I never try to catch reversals unless it's the first hour and a half on the DAX, or unless the market went lower, and then I'm not really trying to catch a reversal, but I'm trying to catch some part of the short covering rally, because when there is a short squeeze, then you might see some panic and you might see a short covering rally. Short covering rallies are fast and short covering rallies are aggressive. It's very violent. And I think we did that in our session maybe last week or the week before. I think we did that. You remember? Once we tried to catch a long while the market was going down. And we tried to catch a W. Do you remember that? I
Yes.
think it was during the afternoon session, maybe
Yes.
during
Yes.
the US, when the US was open.
Yes.
Yeah. So this is good one because it goes fast, you know.
Yes.
But this you need to keep this in mind, because this is also something that that you will do, because I think you trade the morning session, and during the morning you can be aggressive. You will have some time to make it up. So the 31st minutes, I'm very aggressive, very, very, very aggressive. And it also allows you to have a feeling for the market when you're reading the market. You're not in the market, so you have an idea, but it's not as good as when you're in position. The best way to feel the market is to have a position. So usually I arrive for the first 3 to 5 minutes. I will trade in my head. I will watch the book and I will, let's say, imagine like, okay, I imagine that I enter here and I imagine that I exit there. Is it working? Then I'm stopped in my head and I feel like, okay, I'm wrong. Let's try again. And I'm trying again. I will say, okay, let's work the short side. In my head, I'm imagining that I'm entering here and I'm imagining that I'm exiting here. Then it's working. Okay, then I'm doing another trade in my head. I'm like, again, working the short side, for example. And then I win again. So I'm like, okay, then I do it the third time. And when I did 3 winning trades in my head, without clicking, without doing anything, just watching the book, then I know, okay, now I feel like I'm in sync with this market. I have a good idea of the direction. I have a good idea of the volatility. I have a good idea of what's happening. Let's trade it with a small size. Then I trade it with a small size. Then I have a feel, and then I start getting aggressive. And I start to place my first trade during the 10 first minutes. And if I feel that I'm not in sync with the market, I keep trying to trade in my head till I feel like I'm in sync with the market. Okay?
Okay.
Yeah. So usually my morning routine is usually that. Like first trying to trade in my head, and when I feel like I'm in sync with the market, I'm trying to trade live with a small size. Then I'm trying to get more aggressive. If I feel that I'm in sync with the market, I'm getting more and more and more aggressive, and I might, if I'm long, and or if I'm short, and I'm expecting that the reversal is there, I might just exit it and just try to work the reversal. But if I'm long or short, and if it's working during the end of the morning session, then I might just keep working the long side, and I'm not going to look for a reversal because I know that there is not much probability to have the typical reversal we usually have.
Okay.
Can you maybe take the history for the DAX, because I think we had another good example. I'm not sure if it was Monday or yesterday. I think it was Monday, actually. I think it was Monday on the DAX.
History
So,
of DAX.
yeah, like the 2 minutes. The day of Monday in 2 minutes. Monday, what date was it? I believe it was. I believe it was the. The second, I think.
Tuesday.
Yeah, that's it. I think that's it. Is it not the reversal? Yeah, I think. Is it Tuesday still?
Yeah, still Tuesday.
Okay, go back. Go to the right. Go to the right. I think that's the. Yeah, you.
This is Monday.
This is Monday. Okay, you see this reversal?
Yes, W.
Yeah, and at what time was it? Because I don't. At what time was it here?
10.
When it's
10 o'clock.
Yeah, you see, it's what I'm telling you. This is the reversal from 10. You see, it opens, it sells off, W reversal, and then magic trend. If you catch this, you're done for the day.
I have a question. The W reversal is only happen at the DEX. What about the NQ or the YN?
Me, usually I'm done. I'm working this. I never really watched it because usually I'm done with that. I'm done with that for. I'm done with that for the afternoon because I already worked it during the morning. And also, I don't like to work it as much to American market because you have the Globex session. So sometimes you already have a range at the upper part and the bottom part. It's not really like European price discovery because we don't have any night session. So it makes it more accurate. But yeah, you have a lot of M tops and W bottoms. But I don't have like a specific way of expecting it. Usually I don't expect much from the markets. I just trade with the flow. But because the DAX is doing this thing over and over and over again, I'm really expecting it to happen. You know?
Okay.
I would say that's the difference. So how can I explain that? Okay, like let's imagine that you're trading the Nasdaq in the afternoon. Okay, you're trading the Nasdaq in the afternoon European session, so the morning session US. Okay, and you're trading the Nasdaq, and the Nasdaq is giving you a good first leg. What you're going to do, when I say first leg, I mean the first leg of the M or the first leg of the W.
Okay.
You expecting it, you can try to expect the second leg, and you can try to expect a W or a M. But you will look for it if you get the first leg. But when I'm working with the DAX, I'm really anticipating that because I've been doing it for 10 years and it's a high probability trade. It happens a lot, you know? So even I'm chasing it a little, if you understand what I mean. Even if it's if it's not yet happening, I'm already expecting this to happen because I know it's been happening over and over again. You understand?
Okay.
But it doesn't mean that if I, for example, on crude, I can see the M or the W. Well, if I'm trading crude, I will be trading the crude markets, and after trading the crude markets, I will take a look at the first leg, and I will be like, oh, we might be expecting a W, or we might be expecting an M, and then I will try to be more aggressive and to trade it, and mainly I will try to hold. Because what's interesting with this pattern, it's a reversal, a strong reversal pattern. And you have seen yesterday, we had this, and then we had really a perfect reversal, like picture perfect reversal.
Yes.
And we even went higher than the range we had. Like if you look to the high we had at 9:30 of your time, and I think 9:35 or something, we went higher, we broke it, and then we kept balancing. And as soon as you see that the market starts to balance, you know, when it starts to balance, you see between I think between 10:30 and at your time, so 10:30 in the evening till 23, even 23 and a half, like 30 minutes past 23, it was not doing anything. So you know that pretty much it's finished. And you see that when is the European, when is the American markets opening on this chart? At what time in China is the US markets opening?
9 o'clock, 9 o'clock and half at night.
Okay. I see. Yeah. So yeah, that's something you need to be ready for. But I'm not really expecting is as much. But you can use the M and the W pattern like all the time. Maybe I could show you this because it's really in the topic. Hold on, I will show you something. Just give me a second. I will tell you when you can take my screen. Okay, you can take my screen?
Yes.
Okay, can you see it?
Yes.
Okay, this is an old bookmap tutorial that I had done when I was doing I think it's 3 years ago or something. But look to the W inside the size. It's kind of the same pattern. Can you see on the bookmap on the right? Can you see the cluster of orders? And most of them are executed. Can you see that on the right?
Yes.
And then it will reject. Look, this is the second leg. Can you see the second leg?
Yes.
And then from there, you know, we're pushing a little.
And it reversal. Is that right?
Yeah. Okay, you see?
Yes.
And you see, it's all about risk reward. You see now it's pushing. But you see, this was a little risk for a very good reward.
Yes.
But the markets were very volatile. It was fun to trade. Look to the spread. The spread stays even open. The spread, you see the spread of the DAX, it's like 3-4 ticks. So it was a very funny market to trade. A lot of stress. But what I mean by this example is that you can still, even to some extent, I mean, the speed fade is kind of a W. You cannot really see it when you watch the book, because what you will see in the book, you don't see the time. When you see bookmap, you see the time of the book, what happened. But in the book, when you watch the book, it will just do this, like the market is going up for a long time, and then the market will start to go down, and then it stops, and it will do up, 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 up. So this is what you see in the book. Okay. But if you add time, in fact, it's this: up, 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 up. It's a W.
Yes.
You have seen that in the video. Maybe I'll put it again. If you put the video, you can see. You don't see really a W in the book because it's happening too fast. But after watching the book map that actually traces the book, you can see that it's a W. This is the first leg. It's what I call the first leg of the W. Not to mistake with the first leg of a spread. It has nothing to do. It's just because it's a W. So I'm saying that there are two legs. And this is the second leg. You see? And where did it happen? In a cluster of orders that are there for a long time. This is how, because you were always asking me, yeah, but how can I use bookmap? This is a good way to use bookmap, because if I was watching the book, I would have forgotten that at 9,958, there was an order that was there since about 8 minutes, 8 or 9 minutes. Huh? You see this here?
Yes.
Huh? So what happened?
Is this order a fake order, or?
No, it was real. It was a real order.
But when it found W, it remove, and it after the W is found, it add again.
A little part of the quantity was traded. Look, if you look inside, because I configured my bookmap to be very sensitive. Okay, so it's a low quantity. Look, it's not very much. Huh? I think it's like, look, yeah, now it removed, and you will see it will come back. Okay, let's maybe move a little here. A part of it was real, yeah, like 16, but a small part of it traded. Here, look here. It's only about 10 orders, so there is a little chunk of it that was trading. You see the dots? This is execution. You see here, this is execution, and around here, this is execution as well.
I cannot see your mouse.
Your mouse. Oh, sorry. Okay, so I'm gonna explain it to you. You see, when you start from the white line, the lower white line in the W, on the line you have a red dot. Can you see the big red dot on the line? That's execution.
Yes.
Can you see that? There is a red dot on the line. Then the market is coming back, and there is again a red dot on the line. So some execution are done. And then after you have some buying, the yellow dots. You see that?
Yes.
Okay. So of course, I don't know, maybe the algo is interested in the price, in that price, probably because it's an accumulation algo that is trying to be conservative, and he's not chasing the market. So he waited for the retracement, and worked that price, and then a part was executed. So he removed to see if it was possible to suck the seller down, but the seller didn't get sucked down. And then he put his order back to see if the seller would revisit, and then it revisited, and then the market rejected, and the order went back again. But I won't say that everything was executed, but a good chunk of it was executed, and that's also available. That's also real for you see the two first clusters of limit orders. When you take a look to the upper part, look to the upper part of the order. You have like 1, 2 white lines. Can you see that? 1, 2 white lines, and then you arrive to the lower part of the W. Can you see that?
Yes.
There you can also see some dots on the order. You see?
So the up to white line order is trade.
Yeah, it's partially. Me, I think it's the same guy, but it doesn't, because don't get caught up in that. A lot of people, they want to understand what happened. They want to know, is it the same trader? Is it not the same trader? For me, this guy wants to be executed. Why? Because if not, he would have removed his order earlier. And you see, he's very aggressive in the way he's doing that. So to me, he's willing to get executed. If not, at least a good part of his order, you know? But we don't really care if it's the same person. Me, I think it's the same person, but it's not really important. That is having the first line, the second line, and the third line in the W. It doesn't really matter. What matters is that we can trade it and make money out of it. That's what's interesting to us. If we try to give explanations to everything, it doesn't mean that we will make money out of it. And in the end of the day, it doesn't matter. You know, what we want to see is that the market is going inside these orders and the orders are staying there. And a part of the orders are executed. And when we move away from the order, we're coming back into the orders. And then the order cluster is back there. And me, what I see, look to the color. Look to the color. When the market is going down, he's adding more size, because look to the color of the white. It's getting more white when we get closer to the formation of the W. Can you see to the line? When you look from 238, you see at the time at the bottom of my chart, you can see 238, like 14. You can see 1438. Can you see that?
Yeah.
1438.
Yeah.
Okay. I'm trying to remove that. Okay. Oh no. Okay, like this. You see 1438. And then it slides. And when the W starts to form, it's getting a little before the W, when the market is going down, the color gets more white. Can you see that?
You mean the lowest?
Yeah, 9958. The color of
9958. Yeah.
Yeah. You see, it's getting more white.
Yes.
Can you see that?
Yes.
Like probably about 5-6 seconds before the market is going down. This is aggressive. This is very aggressive. You know, because if the guy was not interested into trading, you would have had the opposite. You will have had a dark color, and then when the market is going down, it becomes more light, because he removed the order. You understand?
Yes.
But here we have the opposite. So this guy, probably when he removed his order because he believed in the middle of the W, between the first leg and the second leg of the W, he believed the market will keep going lower. And I think he put his order at 99.50. Can you see that? Because when the order disappeared at 99.58, it appeared at 99.50. Can you see that?
Yes.
Okay, inside. Okay, and from there, if you look visually, it's like the visual volatility, 99.50. Me, if I was expecting, how can I put that? Okay, if I was going short, if I watch this, I could either go long around 58, and that's what I did. But if I wanted to work the short side, I could also try to go short around, in the retracement, around 99.62, 99.60. Can you see that?
Yes.
And then my target would have been 99.50, because it's the visual volatility that I see in the book. So to me, it makes sense that he removed his order from 58 to 99.50, because if the market kept going down, it was probably the next turning point based on a provision of the volatility. Do you get that?
A little confusing.
Okay, let me draw it. What I mean is that if I was working the short side, okay, if I was working the short side, remember, we always have an estimate of the volatility. You remember I draw you something with boxes. So this is the box we in let's say 30 seconds.
Okay.
Okay? Okay. So you have either the possibility, it's what I did when I traded this, like to have the market doing this and then up retrace for a part of the box. But you can also aim for a continuation lower. If you work for a continuation lower, you will take this volatility box and put it next to it here and expect for one volatility unit to be reported here. Okay, so this would be 1 unit. And you work it to the short side, and this will be 1 unit. Okay, so you will do, you remember the concept we saw together. It's, okay, hold on, let's think. It's anticipation or reaction. If you short this here after the breakout, you anticipate it to go 1 unit down. You understand what I mean?
Yes.
Because it's the current volatility. Sometimes I remember when we had the first training last year, and even now when we have this training, you always ask me, but how do you know it's going to go there? I'm telling you because I'm reporting the volatility. I'm adding boxes of volatility to each other. Okay, so imagine me. I'm an execution trader. Okay, I'm an execution trader, and I need to buy 100 contracts in the next 15 minutes. What is the goal of an execution trader? What's the goal of an execution trader?
VWAP.
Yes, we want to beat the VWAP. That's what we're trying to do. So the goal of an execution trader would be to get the best price possible. So if I'm having one order here, one order here, and one order here. The market is coming very aggressively here. It's selling a part of my order. So I'm like, oh, it might keep going down. I might have a better price. So I remove the rest. Then it goes here. It sells into this. I remove the rest. Then it push here. It sells into this. I remove the rest. Then it retraces a little. This is the volatility box. I will put my other order here because I believe it goes lower. I might be filled here. This is the next volatility box. Yeah, it's a little bigger than this, but
So we can judge the next Y line level by using the volatility box.
yes, it's what he did. Look, you can see it. It did this. It did exactly this where he put it his order at 99.50. It's like a report of the last volatility you had between 68 and 60. It's like a mini zone. Between 66, 68 and 58, he reported the volatility south because he believed it might be real. And look, there is even a next volatility zone at 42. Can you see that?
Yes.
Can you see it's exactly the same? He's doing the same as what we've been doing, as what most volatility order book traders are doing. We're reporting the volatility, and maybe he's just quoting there because he believes, oh, I might have a better place in the queue. You remember what I told you? I put a vertical screen, and I put orders above and below the market in the beginning with a repetition of the volatility. Look at the other side. You also have the same. It's like also a repetition of the volatility. Look, if you go to the extreme left, you can see an order at 78. You can see an order at 85, and you can see another order at 90. You see to the extreme left.
Yes.
You see the distance in between? It's an addition of the volatility box.
Okay.
You see?
Yes.
This doesn't matter when you trade. You have no time to watch this. But this helps you to understand how the market works. This helps you to create strategies. And mainly, what you can use when you trade. Me, I'm not really using it when I'm trading. It's more kind of a strategic tool for me. But you can know that the order was there, the order at 58, it was there since 238, and it's still there at 444. Because if you trading, you cannot remember that order has been there for a very long time, you know. Why?
Okay.
Because it changes too fast. What you will see if there is an order, because this is kind of a small order. It's like 16. It's like 3 times or 4 times the current average liquidity. But if you watch around, and you have an order of 10 times the volatility, the average liquidity, then you might remember it, even if you don't have bookmap. But if it's like only 3 times, 4 times the volatility, you might not remember it because you will have it at a lot of price zones, zones. Yes.
So once the first volatility box is broken, it will move to the the other volatility box.
I'm not saying it's going to do it, but as a trader, we expect it to do it. It's
Okay.
what we use at a, because we work in, you need to remember, we work in uncertainty. We work in chaos, okay? And we try to have a logic behind the way we trade.
Okay.
So at the end of the day, we need to think, I'm going to work strategies and I'm going to work something that I'm seeing over and over again, okay? And to do that, we need to establish 3 things. We need to establish the direction. And as soon as we have established the direction, we're going to trade in that direction. Then we need to establish the volatility. And as soon as we have established the current volatility, we might expect that volatility will keep going.
Okay.
Okay? But it might change at any time. But that we have no way to preview it. The only way we can preview it is when it's the end of a 30-minute bin, or when there is a news, or when there is a speech, when there is something happening that we can anticipate, then we will know, okay, the volatility might increase. But if not, we just expect the volatility to stay the same.
Okay.
Another thing we can expect, if the volatility is getting lower and lower and lower and lower and lower, we expect that at some time there will be a shift and the volatility will explode. Why? Because low volatility allows people to put stops above and below. And then when the market is going to break, one of the groups, the shorts or the longs, will have the stop triggered, and that will bring automatically volatility. But besides of that, the only thing we can do is try to find a comfort zone to trade and to try to make money. And to do that, we evaluate the current situation and we expect the current situation to continue. There's nothing else we can do than that. So when you're telling me the volatility box we add it on the top and that it's what will happen, I won't say we sure that it will happen, but I will say that is the thing we use in our work if we want to try to make money, and it works. I can make money doing it. A lot of people can make money doing it. Do we make money every time? No, we don't. We have a lot of losing trades. We have a lot of situations where we
It's just a expectation.
exactly. It's what I wanted you to get. It's an expectation. And anyone that is telling you you can make money every time using this is lying. We cannot make money every time. But either it's something that will work a lot of time and you will have a risk reward with about 1-1. Either it's something that will work only 2 or 3 times out of 10, but the risk reward is huge. Okay, those are the 2 types of strategies we are working. Okay, when I'm trying to pick the reversal for a W or for a M, I might be wrong 2-3 times, but I will lose a few ticks, and I know I'm trying to make a lot of ticks. So I can have 3, 4, 5 losing trades and still be very profitable on that specific strategy, because when I'm going to win, the reward I'm going to have is going to be big.
Okay.
Okay. So yeah, I think it was a good explanation. I think you might exactly understand now what is it that we're trying to do. And Bookmap is helping you to see things you might not see if you're not comfortable with the book. But to me, Bookmap is not replacing the order book. But Bookmap, like Market Delta, Bookmap and Market Delta are powerful tools to go afterwards and look to trades you took and look more in depth into what happened exactly.
Okay.
Okay. And to me, it's also a powerful tool if I want to teach things to people, because it allows me to show you things, because it's very intuitive. In the end of the day, when I do start to get very intuitive, it's harder for me to explain what I do than to do it, because
Okay.
there is a big part of intuition into that, because you've been doing it over and over and over again. So me, a lot of times when I do something, I do it and then I need to ask myself, why did I do that? If I want to explain this strategy, why did I do that? And it's harder for me to explain it because there is a big part of intuition. After 10, 15, 20 years watching the market, the intuition dimension is big, you know? So
Yes.
when you ask me questions, sometimes it's difficult for me to find the answer. I need to think, and then I need to explain. Yeah, I'm doing this because I'm eyeballing the volatility. I'm doing this because I'm eyeballing the volatility. And when I know the volatility, I know that it's the volatility for a specific period of time.
By uh, by uns by practice uh the volatility, I can use the volatility box to practice. Is that right?
To what? The volatility bot to do what?
To practice.
Yeah, absolutely. Yeah.
Okay.
You do it. What you need to do at every time is three things. The three things. First thing, what is the current market direction? Is the pressure to the upside? Is the pressure to the sell side, or is it neutral? Okay,
Okay.
or is it, they will be, you either there is not enough volatility and there is no direction, then you cannot trade. Either you're going to trade long or you're going to trade short. So first you need to pick a side.
Okay.
Is there an easy side or is there no easy side? Today the easy side was to the long side.
Okay.
Okay, but we knew that we were close to the high, so a reversal might come. This is something we know, but if we don't see it in the book, it's just an expectation. It's not the reality. Reality is what we see in the book. Okay, and we expect the current trend to continue. So the first question we ask ourselves, is there a pressure to the long side or to the short side? Second question we ask ourselves is, what is the current volatility box? Third question we ask ourselves is, what is the level of activity and who's in control? Is this a market where the market maker is in defense mode, or is this a market where the market maker is in a situation where he's controlling everything and he's doing everything he wants, or is he in a situation where he needs to defend himself because he's facing a lot of liquidity taking in the same direction? Having a lot of liquidity taking is not a problem for the market maker, but the problem for the market maker is if he have a lot of liquidity taking in the same direction. If a lot of volume is done to the long side, if a lot of aggressive people are buying, then he might face a problem. Those are all the questions we ask ourselves. And from there we will move to the trade we decide to take. And when we decide to take a trade, we will always keep the risk reward in mind.
Okay.
And as we saw this morning, you have two risk reward. You have the risk reward of the trade in the book, but you have the risk reward of the general picture.
Okay.
So the trade we took this morning on the DAX, the risk reward of the general picture was to the short side. But the risk reward in the book for the last 2-3 minutes
It's on
was to the long
long
side.
side. Yeah.
Okay, what does it mean? It means that it can reverse anytime. So it's not a trade that we're going to hold for a long time. 90% of the time, we don't hold trades for a long time. The only exception is when we can expect a reversal.
Okay.
Okay. Maybe we can take about 10 minutes pause
Okay.
because so we can go bathroom and maybe drink a coffee.
Yes.
And then we get back.
I drink a lot of water. I need to go to washroom.
Yeah, me also. It's getting hot now here, so
Yeah.
I'm drinking a lot of water too. Okay, see you at around 20. Okay.
Okay. Okay.
Okay. Thank you. Yes. See you.
Thank you.